Traders, Raghi here. Let's get a quick audio and video check in for our first of two sessions for our Volume Max 2.0 class. All right, awesome to have you here. You're going to learn a lot of things that are going to absolutely blow your mind, change the way you look at price, change the way you look at your charts. For many of you who've had the toolkit in the last few days before the class, you're probably already starting to see that. I'm going to put the pieces together for you, and we're going to talk about how to put this to work as quickly and as effectively and frankly as easily as possible. So remember, we have two sessions, and I love that we've broken up this into two sessions because day after tomorrow, we're going to meet up again. So you've got some time to percolate, to think about, to test some of the things that you're going to learn in this first session. And then we'll have the next session where we can pick up the conversation, and you're going to absorb everything so much better in this smaller 2-hour chunk style. I love teaching in this way. I've noticed that traders pick up everything so much better. There's no fatigue, there's no overwhelm. So I'm super stoked you're here. And yeah, let's get to work. Now, so much of what we're going to do here today is obviously covering the tools. But more so than just covering the tools, I mean, definitions will only get you so far as a trader. How do you put something to work? So we could spend, 20 minutes talking about what a screwdriver is. We could talk about how to start driving some screws. And that's really what this is. It's going to be a workshop. We'll definitely cover a lot of the what and when and how, but this is really designed to get you using the tools with as much confidence and understanding as possible. All right. So how volume reveals what price can't. It really can't, right? This isn't just something I say. It's true. Participation matters. You're going to find out just how much. Now, just a little bit of housekeeping. You will eventually get the slides, and depending on the questions that you have, I'll go back and tweak the slides so they are a great resource. But for those of you that are in the Sector Secrets Mastery, you know how much I love to use notes. And I will make the notes available as a PDF after our second session. So the notes that we take, the slides that we're using, I will make everything available afterwards. And this way, whatever questions have come up or whatever detail I can add, I can put them in the slide deck. I can put them in the notes. All of these will be resources for you to have. All right. So let's get to it. Now, we're going to get into basically the toolkit first because you want to know what you've got before you put them together. We'll talk about what each does. Each one has a job. We're going to talk about what each does, and then I'm going to show you how I'm anchoring it, because anchoring is such a big part of what we do with this toolkit. When I like to use these, when is it going to be a really applicable time? And then I'd love to get into the charts, because nothing is better than watching the tools at work as we look at setups, putting what we've learned together. Yeah? All right. So this is just at a glance what your toolkit includes. Everyone should have access to this. And if you do have any tech-related questions, two things. One, the tech session has been recorded. It is available for replay. And the replay of tech sessions is amazing because you can do it at your own pace. You can pause the replay, rewind the replay, and it's really very, very helpful. Two, if you do have a tech question, please put it in off topic. After teaching dozens of these classes over the years, it's really easy to slip into a tech session and away from the how-to. All right. So I'll send you all out the PDF of the notes after the class. So you'll have all those. For now, you can just kind of follow along, and then you'll get a nice cleaned up PDF for when we complete day after tomorrow. All right. So let's get to it. First off, let's just go through what every single one of these does in a basic way. Now, basic doesn't mean superficial. It simply means the most effective thing you need to know about the tool. Let's start with the grab candles. Now, by the way, if you happen to have top tier, the definition is basically the same, but for those of you with tops and you have the grab candles, this is your at a glance of bullish, bearish, or neutral, right? Blue is neutral, green is bullish, red is bearish. Now, in terms of volume, it's not absolutely imperative that you adhere to the candle colors, but they will communicate a certain amount of sentiment and participation in terms of bullishness, neutral, or bearish, right? So the visual of the grab candles is something that I've been using for, I guess, coming up on 30 years now or so. And I do find that the story they tell is better than a traditional Japanese candlestick, okay? The multi-trend, again, for those of you using top tier, this would be the multi-structure. The multi-trend is important because this is telling me if the market has an uptrend, no trend, or if it has a downtrend. And just like everything else that's color-coded on my screen, green is uptrend, red is downtrend, and you'll notice it's blue when there's no trend. Interestingly enough, institutions aren't as concerned about structure as, say, maybe I would be. And there's a reason for that. Their pockets are deeper. They can build larger positions at varying sizes throughout a range, while we as individual retail traders do need to think about having a stop loss and a maximum risk to our account. Institutions aren't as rigid with that. Yes, they have a certain amount of risk on trade that they have, but obviously deeper pockets are going to make for wider ranges and more allowable risk. This is where, as retail traders, we have to be risk first. And yes, the multi-trend is a big part of risk. Here's the one thing that we can never break as retail traders when we are trading with volume. We cannot buy in a downtrend. We cannot short in an uptrend. We cannot look for calls in a downtrend. We cannot look for puts in an uptrend. That's really simple, right? Okay, Rog, we can't be contra trend traders. That's it. That's it. So that's where the multi-trend is going to keep you out of harm's way and keep you on the direction of the highest probability follow through. Okay. It brings us to the volume weighted average price. Now, I'll tell you what, you have tools that are far better than this now. All right. The VWAP is very helpful. And it is something that's included in the toolkit, the anchored volume weighted average price, because Thinkorswim doesn't have one. Right? They don't have an anchored volume weighted average price. I will show you how to use this, but suffice to say, VProfile and VScore are going to do the job. But there is one thing anchored volume weighted average price can do. We'll get into that. And the only way to use a VWAP in modern markets, now that the institutions know that you and I know how to do this, they're changing up their game, which is why the VScore and a lot of the other tools are so powerful. But an anchored volume weighted average price, we'll get into it, needs to have multiple anchors to identify a range. I will say it's a lot more work. It's included in the toolkit because we didn't want it lacking a key tool. But remember, wherever I anchor the anchored volume weighted average price, regardless of the time frame, we'll get into all that detail. The V-score is going to show me the same thing and much, much more. Okay. All right. Volume profile, VProfile. There is an institutional range of 70%. Now, I'm always testing things, but there is an institutional range of 70% where the bulk, in this case, just over 2/3 of the volume, takes place on any chart. Again, any chart. Wherever you anchor the VProfile from that point forward, it's studying volume. And we're looking for the 70% range. And that's going to be where we talk about value area high, value area low. The easiest way to understand volume profile is support and resistance, okay? Is support and resistance. So again, almost everything we talk about in trading, every single tool that you have boils down to, is it giving me insight into direction? And is it giving me insight into that support and resistance? And many of you out there might have heard support and resistance by different words. So let's tackle that really quick. Support and resistance. Support is a floor. Floor is represented by buyers buying, outnumbering the sellers. And buyers bring what? Demand. So whether you use the jargon of floor, support, buyers, demand, It's all the same thing, and we're identifying those things with this 70% range of volume for the V profile. V score, this is really, and I got to tell you, I would never say this in the lead up to the class, but I'll tell you all. There are certain tools that from time to time I think, gosh, Rog, this is so good. You might want to keep this one to yourself. There's two tools I have like that. One of them is the V score. It is insanely accurate. It sees things nothing else is going to see. And if there's a tool where I say, gosh, this is one of the ones I would have kept for myself, that's one of them. This is something I created in 2008. So suffice to say, it's 18 years of fine-tuning, testing, and using it on the proving ground. V-score is going to decode the shenanigans, the games that institutions are now playing because they know you and I know how to anchor a volume-weighted average price. They've adapted. We're going to say, all right, we know you're playing a different game, but how do we map what you're doing? You're going to see how we can use the V-score on an intraday chart, on a daily chart, and even on the weekly. All right. V-score bands work with the V-score. V-score shows you a reading of standard deviations around an anchored volume-weighted average price. The bands are going to show you where that is on the price chart. That's it. That's it. Some people like the visual of the V-score. Others like the bands. You really use them the same way. All right. The trend DeLorean. I don't use this one as much, but there is a momentum factor to volume. And that's what Trend DeLorean is designed to do. Now, I don't like to momentum trade. I'm continually looking at testing and looking at ways to find where participation is. Trend DeLorean is just as it says, when momentum typically hits the gas pedal. Now, for those of you that don't have the Trend DeLorean running, don't worry about it. Quite frankly, I use that one the least. It is nice to have on the chart, but it's probably the least important of the toolkit, unless you really like to look for momentum along with the other setups that I'm going to teach you. So don't sweat that one at all. It is part of the toolkit, but don't sweat it, okay? We're probably going to talk about that one the least. Next is the Volume Sweep Pro. Now this is the newest addition to the family, but I say new. It's really not new. It's new to the toolkit. It's new to those of you using the toolkit, but like everything else, this is something that I have been doing with Forex and with futures since, oh my gosh, 2006, 7? I'm trying to remember. Volume Sweep Pro is about time and institutional behavior. It's probably the most interesting in many ways of the tools because there are certain times that institutions see this. You might say, Rog, how do you know? Well, A, I've been using it for well over a decade. And B, I had it's a privilege. I had the great privilege of being the chief currency analyst for a major US Forex broker. And because of that, and because Forex brokers are the other side of the trade, I was able to see where they typically look to take advantage of time and price-based levels. And that is what that particular tool is based on. Having the insight at the brokerage level of where they were looking at ranges to essentially, not to be mean, but if you're the counterparty to a trade, you don't want to lose, do you? Right? That was so unique about Forex back in the day. They were the desk, they were the counterparty, right? These orders were not going off into the general foreign exchange world. Your Forex broker took the other side of your trade. So a lot of the insight and volume I have is the years that I was a chief currency analyst, because that was the only time I could really see, in this case with that institution, what a broker was doing. So really interesting. All right. So we covered a little bit of this earlier, but what are you going to learn? Again, where are institutions getting in and out of positions? Where are they basically picking off retail traders using their liquidity? How do we know the market's too far away from a level and it's going to snap back, right? Or it could be above or below. When is the market sentiment shifting? Now, each one of these questions you now have a tool for. How do you answer this question? Where do institutions get in and out of their positions? Volume profile is one of them. V-score is definitely another one of them. The Volume Sweep Pro. So now you've got the tools to answer this question. When did the market wander too far from the mean? That's the V-score. That's the V-score bands, right? When does market sentiment shift? Well, we can look at market sentiment shifting at extremes on the V-score. We know that sentiment can shift at a Volume Sweep Pro. We also know that can be shifting based on looking at the market structure, the multi-trend, the multi-structure, and we can look at those two rows of colors that are sitting at the bottom of your charts. Again, any tech questions that you might have, feel free to put them in off topic. Lorna Bot may direct you to the install video, and she can also help you out over there, okay, if you do have any questions about the indicators, things like that, all right? Reversions to the mean. Now, this used to mean a whole lot more. Institutions realized traders were looking for mean reversions, and they started realizing, oh, that almost guarantees liquidity. And they started moving around their order entry, knowing that traders are looking for a mean reversion. Why are anchored volume weighted average price, the actual anchored, let me just call them an AVWAP if you don't mind. Anchored volume weighted average price is such a mouthful. Why does the AVWAP have inconsistent reaction? Because the institutions now know, you and I, retail traders, figured that out. Right? It became common knowledge. So they shifted their game, hence the V-score. So this is probably where traders get hurt, doing things the old way. You're going to learn how to do things the new way. And what trades to set up because of flow? Gang, flow is dollars, flow is volume, flow is attention. Everything we do in trading is about flow. There's no two ways about it, and we're just going to have a better set of tools to understand flow. So let's start at the most basic level of flow. All right. And again, if you have any tech questions, throw them over and off topic. Bot's over there. She'll be able to help you out. All right. Volume labels. So when we get into labels, and I'll show you each one of these tools as we're going along, but it's really basic. A lot of traders love using a volume histogram. How many of you have used, you look at your chart and you have that little histogram sitting at the bottom here? How many of you have had that before? In fact, most platforms will do that automatically. You'll notice I don't use that. Why is that? Because volume needs comparison, historical comparison. You do not need this if you're using the volume labels. In fact, the volume labels are going to give you so much better information than a volume histogram. Get rid of it, save the space on your screen. You have something far better now. Data is only as good as the history of behavior. And I don't mean a week ago, a month ago. I mean looking at a bigger picture sometimes of 21, 30 days, or even beyond that. The default on the volume labels is 21 and 30 days, right? So when you see those little histograms on the bottom, do you know that we're at 20%, 19%, 60%, right, relative to average? That's why the histogram is just not as effective, all right? Because the low or high volume is relative. If someone says high volume, compared to what? Yesterday, the day before, 30 days ago, right? So it's always relative. We need to have that measuring stick. Now, here's where a lot of traders can get turned around on volume. And I spelled participation wrong. There we go. This is where traders can get turned around on volume. Low volume does mean less participation. It doesn't mean we won't get follow through. It just means that follow through can be noisy. What's noise? Noise can be wicks, right? So when you're looking at a candle, whatever that candle may be, and then you're seeing these very, very long wicks, right? That's noisy, right? When we have the body participating, that's less noise. The wicks can be noise. Also, the other thing that can also denote noise are gaps, right? Gaps where one day we close at this level, and the next day we open, say at this level, and there's a big hole left on the chart between where we closed and the next candle began. You'll see that mostly on a Sunday with the indices, and you'll see that mostly on the stocks from session to session. So gaps can be noisy and they can be more frequent in low volume. But here's where traders get hurt. High volume does mean high participation, but it can also be exhaustive. Because if a whole bunch of traders got in at a certain price, whatever the volume histogram was doing, your average trader thinks, oh my gosh, this is the beginning of a big move. You're going to see when you use these tools, oftentimes spiky volume can actually be the end of a move. It can actually be what's often called capitulation. Who's left to keep selling it off? So if you read most books, they'll tell you, oh, big volume means a breakout and it's going to keep going. You're going to find, and how many of you have seen that already? Peaky volume, high volume, usually means that's the end of the move. Whoever was left got in, and the institutions did what? They took the other side of the trade. Because remember, for every buy, there is a sell. That's the name of the game. So for every buyer, there's got to be a seller. And it's the who is selling or the who is buying that we're trying to figure out. We want to be on the side of the size. And frankly, that's your institutions, banks, funds, etc. Yeah? Okay. So that's what the volume labels do. Let's go take a peek at the volume labels together. All right. So let's do this. All right. So if I'm looking at volume labels, and just again, I'm just going to generically just show you here real quick. It doesn't matter the symbol we're looking at. I can do it on the S&P. I can do this on Apple, whatever it is. The label has, as you can see, a number of panels, and it's pretty compact. And what it's telling you is what we have today versus, say, the average 30 bars or 21 bars. And oftentimes, I'll just leave it just to save space. And I'll show you how you can remove or add more information. But usually, I keep mine pretty succinct. 30 average, and what's the current, right? So volume right now in the S&P is pretty good. With 90 minutes left in the session, we've got 3/4 of normal volume. It's all defined. Yeah. All right. So if I want to go into, and I'm just going to show you here real quick. I don't want to go down the tech rabbit hole, but I do want to at least show you what the settings look like so you can choose the view that you're comfortable with. Yeah. All right. So this is what the volume label choices are. You'll notice that I have today's volume checked off, the 30 bar average, right? Show the current bar. I keep pretty much at 30. But if you say, Rog, if I want to look back less than this, if I want to look back more than this, you have that choice, right? Rog, I want to see what this has been doing for the last 120 days, or I want to look what this has been doing for the past, 2 weeks or 15 days, whatever it is. Feel free, but this is usually what I keep it on, about 30 days. All right. So again, more information is not always good, but the information you want to see. Now, if you want to know if there's unusual volume at 110%, great. Lower this threshold, right? You can absolutely lower that threshold. So again, you have choices. Choices are great, but don't have so much that you feel paralysis of analysis. For me, that 30-day average is both effective and really succinct. So I can just leave it compact there. And that's all the volume label is. Simple, get the information you want, have whatever look back you'd like, but mine's going to be set at 30. So if you're looking at my charts, Rog, you settled on 30. I do like 30. 21's pretty good. I don't like going much less than 21 unless there's been a significant event where we've had monstrous attention where I would say, hey, FOMC surprised. Or, for example, but a few months ago, war broke out. Those are things where we might want to say, you know what, let's make sure we include that in that look back. But it's not going to be a volume spike. It's going to be an event. A lot of traders want to look at a histogram and say, when was volume high? I have seldom found that to be a good anchor. Events that attract participation, that attract attention, usually surprises, that's going to be where I want to make sure I'm studying the volume. All right, VProfile. So let's talk about the VProfile. This is very helpful, and this is definitely going to be something very different than maybe some of you have looked at for support and resistance. If I'm looking at a VProfile, what I'm looking at is 70%. We talked about this earlier. 70%. So if 100% is all the volume for the day, I'm looking at 70%. And of this 70%, there'll be a value area high, which is resistance. There'll be a value area low, which is support, and there'll be a point of control. Now, point of control, or the POC, much like an anchored volume weighted average price, institutions know where the size is. We know where the size is, and it's become pretty common, right? It's become pretty common in terms of where traders know size is sitting. There's less likely to be sweeps at levels where traders already know there's action, okay? So when I'm looking at a V profile, AFD, they're two very different things. Number one, I don't use a histogram. I can say with a lot of confidence, you don't need a histogram. You'll never see it on my charts. When you're in the sector secrets mastery, I will never make a decision based on a volume histogram. What I'm going to make decisions on are these tools here. So it's not a matter of a benefit. It's a matter of information. I'm going to get better information about volume with the labels. I'm going to get my volume ranges, think support and resistance, with the V profile. Okay? So the idea here is I can look back at a certain number of an average, again, on that volume label, and I can know with a percentage accuracy, are we 70%, 60%, 20%? And it's just much better information without taking up all the room on a chart. So I haven't used a volume histogram in probably over 25 years. So whether that's helpful or not, the trading success I've had, none of it goes back to a histogram. It just takes up space, valuable real estate on the chart. Okay, so back to the V profile. Support and resistance. Support and resistance. The most important levels of the V profile are the value area high and the value area low. Frankly, the least important is typically the point of control now. The POC, where the most number of contracts or shares have been traded. So again, the most contracts or shares are traded at the point of control. Everybody can see that. It's become pretty normal. So I don't use it as much. Value area high, value area low is where you're going to see most institutional sweeps occur. All right, not the POC. POC used to be interesting and important. Again, the minute something is obvious, institutions know, and they'll use that because it's almost a guaranteed liquidity play. Now that we know that's there, it's not as good for them because the anchored volume weighted average price, we started acting like the institutions. That's no good for the institutions. A POC, we started acting like the institutions. Once they know the retail traders have gotten in the game, they change their level. They have to. It's nothing insidious, right? They have to because it's become obvious. All right, the V-score is about attention. So when we anchor it, we're going to talk about dates, lows, frankly, highs, earnings, first of the year. There's no one way to anchor anything, but there are set levels to anchor things. So let me show you on, let's go to the charts here. Bear with me. So if I'm looking at V profile, if you're anchoring intraday on V profile, I've been anchoring my V profile to 5 a.m. So if you're looking at my V profile, you'll see the green, the red. I'm going to show you the settings. So V profile intraday, and I'll have all this in the notes, gang, so don't worry about that. So let's see. I want to get into the V profile. Okay. I typically will anchor this to 5 a.m. Now, I just uploaded the indicator. I think the indicator is still at 7. 7 a.m. is not a bad time, but I've been anchoring 5 o'clock. Now, I am looking at both the 5 a.m. and the 7. 5 a.m. because it syncs up better with our sweeps. 7 because, frankly, I've got the most number of years looking at 7 a.m. The 5 a.m., though, is getting more and more of my attention. I've been paying attention to this now probably 2 or 3 years at this point. And even though I believe it's a default at 7, when you look at the Sector Secrets Mastery intraday charts, you'll see mine at 7. The green line, here, let me move this over and I'll show you. The green line is the value area low. The red line is the value area high. Support and resistance, gang. That's it. Okay? Support and resistance. All right. So again, you can look at both. I think a lot of folks think there's a magical set level to volume. It's really not. Um, what you're typically looking at is a comparison of participation. I would say if you leave it at 7, you're probably going to get really good levels. Okay. If you, and it might be very similar to 5. 5, I find, I mean, take a look. This is today's chart. I'm not picking a well-chosen example. Every time we got down there, this is a little noisy at 11, but just about every time we started approaching this, you can see that we had a sweep. And even though every single one of them wasn't, I mean, we did this 1, 2, 3, 4, 5, 6, 6, 7 times. There's one in there too. When I see we bounce 5 out of 7 times, right? Yeah, that's a level that has attention. Is anything going to be 100%? Of course not. Of course not, right? You can see here, got way below, here, way below. But of all the times we hit this value area low, look at how many times we did find price moving off it. So again, I think what a lot of traders want is certainty and something that works all the time. That's where traders get into trouble. They get into trouble because they think something is going to be 100%. If I can have something that works 60% of the time, 70% of the time, here 5 out of 7, probabilistically, I'm going to be on the right side more often than not. Okay. Now on TradingView, I know a lot of you are on TradingView and I'm using some TOS charts. TradingView does have something really cool, all right, that TOS does not. So let's take a moment to talk about this because it is related to volume profile. When you go into the indicator section, and again, I don't want to get into tech, but I at least want to show you what it is. When you go into the indicator section of the TradingView, you can actually pull up something called visible range volume profile. Visible range volume profile. You'll find that under technicals, then I believe they put it under profiles, and this is it right here. Visible range volume profile. So on TradingView, they have a really cool tool. And they have something similar on TOS. It's just not as good. All right. This is probably one of the main reasons I have TradingView. In this visible range volume profile, there's a couple adjustments you can make, and you can watch the video later on, but I'll increase the row size to 300 so I get a far more minute amount of information. I think it's set at 150 default. I'll make all the lines gray. I don't need the different colors, up, down. I don't really believe in up and down volume because remember, there's always a buyer when there's a seller. There's always a seller when there's a buyer. So I just make everything gray. And then you'll see here, you've got the value area high, low, and point of control. Now you can color these whatever you'd like. You notice I've made mine kind of a light blue, and you'll see that right here. Value area high, value area low. My point of control is gray. There's your point of control. Okay. Now, the way this works, because it's visible range volume profile, whatever time frame you have, the amount of information, in this case price action, that you've got on the screen, that's the anchor. So if I slide into my viewable area up to July, the visible range volume profile is plotting from July forward. If I want to know what the volume profile is for the year, I'm going to squeeze in to January 2026, and now it's calculating the value area high, which is right here, and you can color these whatever you'd like, gang. Point of control and value area low, right? So visible range volume profile is calculated based on not an anchor date, but how much data you have on the screen. So let's say you want to know what the volume profile is for this quarter, right? Starting in June. You would anchor to June by simply making sure June is on the far left edge. And then you can see my value area high right up here. And you can see my value area low down in here. Now, not a single one of these tools is a standalone reason. Most traders are looking for signals. The one magical dot, arrow, anything that tells them to buy and to sell. That's been the holy grail search for every trader since the beginning of time. What you're going to learn is what most traders don't do. Most traders lose because they're looking for the magic holy grail signal. You're going to learn what successful traders do. Setup and confirmation. You're always going to have at least two reasons to say there's something to do. All right. So whether you're looking at the volume profile on Thinkorswim or on TradingView, it's a little bit different. You're going to use the visible range volume profile and you can set it up that way. All right. All right. Moving on then to V-score. My baby. So when we look at V-score, we look at the V-score. And again, when we talk on Thursday, having this session under our belts, we won't have to, jump into it again. We'll build off this come Thursday. Really simple what the V-score does. It takes everything that was, past tense, great about the anchored volume weighted average price, and now we can see the standard deviations. Okay? This is the most important thing about the V-score. It's that easy to use. Treat it as a line chart. If you're unfamiliar with what a line chart is, instead of candles or bars, it's just one line. And that line can show support and resistance. Treat the V-score as a line chart. You look for double tops, double bottoms, triple bottoms. What level on the V-score did we revisit and then revisit again? And sometimes again and again. That's support or that's resistance. So treat it as a line chart because that's showing us where the first time the V-score bottoms out, we get to see where the institution's engaged. How often is it the anchored volume weighted average price? Not often at all anymore. They still use it sometimes, but not as often. You're going to see it at a 1 standard deviation, a 1.5 standard deviation, a 2.2 standard, right? They're playing that game now. The V-score is going to show you that. The other thing that I will mention is there usually are extremes for the entire range, especially when you're intraday trading, you can see that. So make sure you also take a look at the highs and lows, and the V-score has a label built into it that does that for you. Okay, it'll tell you this is the high of the range, low of the range, but what it won't do is identify those double tops, double bottoms, triple bottoms. That's where you read it like a line chart. And sometimes they'll be the same level and sometimes they won't. But now that you know it's just a simple line that I've got to look at, the reading becomes really easy. Now, when you anchor a V-score, start really simple, right? Start with the beginning of the year, the first trading day of the year. Right now, that's January 2, 2026. Okay? But as you get more and more comfortable with V-score, if a stock had an earnings surprise, it's a huge move on earnings, that can be another anchor. Or you can replace the first of the year anchor with that earnings. Not every earnings deserves an anchor, but usually surprises do. What does a surprise mean? Participation, attention. Is it starting to gel a little bit? Okay, Rog, anytime we have a surprise with earnings, yeah, there's probably a reason to think about an earnings V-score. Significant lows. That's going to be really more with a weekly chart. So for example, on the weekly chart right now, let me show you that right now, because this is probably the biggest upgrade on my anchor to the weekly that I've made in years. All right. So for those of you that have been V-score fans, yeah, Rog, where on earth are you anchoring it now? For a while, we were using the pandemic low. For a long while. I said, Rog, it's 2026. Yep. And it worked great. But we had another significant low not all that long ago. The tariff tantrum. All right. The tariff tantrum. When the tariff tantrum happened, attention, oh gosh, you bet, full on panic, right? So on the weekly chart, I'm using March 7th, 2025. I haven't, and by the way, we don't change these willy-nilly. This idea that, oh my gosh, Rob, do I need to think about where I anchor every month or every session? Absolutely not. These have got to be significant events. Yeah, sorry, April. Did I say March? April. April, you can see the date right there, 2025, 04, 07. April 7th of last year, 2025. So we're not re-anchoring these on any regular basis. I think a lot of folks want to get really cute with nuances. It's got to be a huge attention. When you hear someone panicked about a stock, about a sector, there'll probably be some re-anchoring specific to semiconductors coming up pretty soon, right? There's a panic happening. Is it one that was greater than the April 7? Not quite yet, but there have been some panics happening in things like Micron. So yeah, I might look at it, but chances are I'm going to leave everything still to that April 7. And this is how good it's been. Let me show you. You might say, Rob, you sure we don't have to anchor that often? You really don't. Take a look. And there's been a lot of panic with the whole situational awareness fund, right? Micron's a great example. Let's get to the real world, right? Here's my anchor. Here's my first touch at the anchored volume weighted average price. Before that, I had a touch just above the anchored volume weighted average price at the +1. So I'm going to keep those in mind. I'm going to go forward. Here's another touch at the +1. Here's another touch at the +1. Here's another touch just at and below the +1. Here's another one and another one, right? I sound like DJ Khaled. And another one, right? Where is the volume kicking in? Just at or below the +1. Is it the anchored volume weighted average price? No, it's too obvious, right? Most retail traders figure that out. They're anchoring, sometimes incorrectly, but they're waiting for that VWAP. What do the institutions know? Nah, we don't need them. There's enough liquidity for us at the +1. See that? And the only way I would know that, is if I was looking at the standard deviations of the anchored volume weighted average price via the V-score. Okay? Now, you might say, Rob, do we just buy the V-score? No, I want to have something and, right? Something and. So every time I get close to that +1, pretty good spot. So when I got some emails from folks saying, Rob, the situational awareness thing, is it going to blow up the semiconductors, especially the AI names? I said, no, go look for some V-scores. These are still very healthy uptrends. This is a buy the dip. That whole situational awareness fire sale was ultimately a buy the dip on a vast majority, not every single one, but on a vast majority of those stocks. It came right back down to an institutional. Look at that. I mean, we didn't know about situational awareness at the end of March. And look what it did. It doesn't make sense sometimes, but size doesn't need a reason. It just needs to either defend a position, right? Or they see that as a reasonable level from which to put dollars to work. We want to coattail that. We are surfers in the big ocean. My surfing a wave doesn't change a wave's mind one bit. It's still doing what it's going to do. We're surfers, and volume is the wave. We're not going to affect the wave. We want to surf the wave. Okay? We don't want to get cute and try to outsmart institutions. We don't want to get cute about where the top is or the bottom is, right? We'll do that to other people who are far more well funded, or that's what they do, right? Some folks like to do that. Silver surfer. There you go, Dale. All right. So that's how I would use the V-score. Now, intraday, same idea. Instead of anchoring, well, I should just let's jump to the end of day for a moment. I showed you the weekly because that's where the significant difference is. I haven't changed my end of day approach at all. You'll notice, for the most part, unless it's an individual stock or an individual sector that has a dramatic event, an attention-grabbing event, almost every name you can start with the first trading day of the year. Okay, you can start with that first trading day of the year. Almost every single one. All right. There'll be surprises from time to time. They're going to happen like this. But for the most part, you can see, in this case, this is Micron still. Look at how much the mean is still. This is anchored volume weighted average price. That's where they're acting. So everyone see, and I don't want to just point things out and say, oh, you see it? If you don't see it, let me know. That's what this class is all about, this classroom time together. We don't have to worry about the live market moving around. And I'm going to purposely find things that we may not be in, because the stuff that we're in, I know worked. That's why we're in them in the Sector Secrets Mastery. But to me, the value of this time is, Ron, let's just look at, I'm trying to think of a significant position. I think Microsoft was a pretty big position in situational awareness. All right. Here's a really cool example. Azure's making a ton of money, a metric ton of money. And yes, there was some noise. But since that, where has volume stepped in? Where has volume stepped in? The negative, exactly, Dubai Kid, the -1. Now remember, gang, there might be certain stocks because of an event or certain sectors because of an event that I have a different anchor to. Not every single symbol in your galaxy of symbols is going to be anchored to the first trading day of the year. Most of them will be. All right. I would always start every year and every symbol with the first trading day of the year. And here's the cool part. Let's say you're thinking to yourself, Ron, would that earnings be another place to anchor a volume weighted average price, or maybe this low, right? Would this low or earnings be another reason? Here's what I'll say. Rather than re-anchoring this and losing sort of our home base anchor, put another V-score on. Go into your indicators, right? Go into indicators and run another V-score. So you can go into your indicators and just grab the V-score end of day and just do another one, right? You can run two at the same time. You're not going to break anything. You can run two at the same time. So just go to your ST V-score end of day, put another one on your chart, and then you can say, well, Ron, can we anchor this to the earnings date? Can we anchor this to, so I'm just going to put this on the screen here. So now I can run two. And I would say use another color. So you'll notice I tend to vacillate between that maroon color on the V-score and the cyan. And you might say, Rod, yeah, why do you do that? Because if I want to go anchor volume to July 29 or to June 25, it's just an easy way to know the difference between the two anchors that I've done. So get comfortable changing the color. The color doesn't mean anything in terms of what it's doing. It's just an easy way for you to differentiate between maybe two indicators you're running with different settings. Does that make sense? So here I've anchored one to this low, right? If I wanted to see what's happening from the earnings, I could just change this maroon one while I still keep the main anchor. So get comfortable with that. There's no harm in doing that. In fact, on really good setups, they'll probably agree to a certain amount. You might see the -1 standard deviation being tested by, and at the same time, whatever might have been relevant on the, in this case, shorter dated V-score. So sometimes they'll be in agreement for different reasons, but it'll still be looking at size. So feel free to do that. If you look at a level and say, Rod, whether it was a peak, there's a high up there. That was a peaky high on June 1. If you want to say, Rod, there was some huge attention there. All I'm looking for is attention. So if I want to try the anchor, aside from the beginning of the year, let's do that one. Does it tell me anything? Not really. Well, I can't say that. No, that's not true. That's not true. So I just changed the anchor to this up here. That's attention. All right. So I changed my anchor. Well, what were we bouncing off of? Look at that. Look at this. Wow. And I haven't done this. Some of this I wanted to do live with you all so you can see what I'm doing. Because well-chosen examples don't teach you anything. This is a workshop. Look at how many times we got at that level. Almost perfectly. 1, 2, 3 times. 3 times. The first time gets your attention. The second time likely is going to be a setup. The third time, if you miss the second time, maybe now we have another reason to look at it. It could be a Darvis or whatever, right? So it should get your attention. All right. Okay. So I'm going to hide this. And then if I want to run a second V-score because there's another date that has my attention, give it another color. Maybe you like yellow, maybe you like pink, whatever. Give it another color. Keep that first of the year running, but you can run that second V-score. All right. And just say, hey, where did that thing bottom out? Just look at it as a line chart. Double tops and double bottoms. By the way, if someone's saying, Rob, should I buy Microsoft after earnings? And it looks like it just wants to run, right? That's what most Momo traders will do. So in this area, think, Microsoft's going to the moon. Didn't you hear Azura's making $100 billion a year? What do the V-scores say? Look at this. Don't do it. Do y'all see that? Don't do it. It's like a line chart. That's resistance. Don't do it. Right? I have support here. I have support here. And I have a ton of resistance up in here. Okay? Support and resistance based on volume. And I want y'all to see it. I did not want to capture a bunch of charts and just show you well-chosen examples because, gang, that's not how the market works, right? I wanted to show you some things that have had some massive moves, earnings, a hedge fund blowing up, saying, hey, did volume participate or not? Because if it's not participating, I'm not participating. Richie says, I'm getting goosebumps. I love it. All right. So we're about 50 minutes in. In about 5 minutes, I'm going to give you all a quick break so you can percolate for a minute. We'll come back for our second hour. So about 2:56, I'll give you all a quick break. Okay? All right. Matt says, I'm still new and I don't understand this yet. I want my settings to match so we're in the room I can follow along better. All right. So basically, what I would say, and if you want some just sort of, I would call them defaults. Matt, this ought to help. And for those of you that want some basic defaults, yeah, here it is. You ready? For the intraday, if you want to anchor your V-score, 5 a.m. And I'm always going to talk on East Coast time. For the daily, so intraday for us is the 5-minute chart. So I'm going to be really specific because in the mastery, that's what I'm using. On the daily, we're going to use January 2nd of this year. Okay? And then on the weekly, these are your defaults. We're going to use April, 7, 2025. Those are your defaults. Make sure your time frames have those on them. Matt, does that give you a place to start? Yes. Now, this is a class, right? You're going to have a lot more insight into how to use this than the average bear. You're going to start thinking tactically and like an institution. Institutions are going to watch participation. Sometimes they are the participation. That's what we're measuring, right? So you can leave those defaults there. By the way, gang, however your indicators come out of the box, it's easy to update these. And as you use these for the rest of your trading career, we're going to change these from time to time. I'll have a new daily anchor next year. It'll be the first trading day of 2027. If we have another major event, the weekly could change, right? So you can go in and change these. Now, so I would say your optional, right? It's going to be earnings driven. It's going to be peak high, peak low driven. Those are going to be optional levels for a second V-score. I don't do this intraday, so it's really going to be more a weekly or a daily thing you can do. If all you use the defaults, you're going to see things most traders aren't going to see anyway. But since this is a class, I want everyone to see what's possible as you get more and more comfortable with these tools. Okay? All right. Does that answer that question, Matt? Chiranjeev? Yep. You don't have to make it complicated, but I do want to give you enough knowledge that as you grow with these tools, you're not stuck at a basic level. You can start to say, you know what? I get it now, Rog. Microsoft had blowout earnings, or the FOMC adjusted monetary policy and it created a huge move. It could be another tariff tantrum, whatever it is, you know, to pay attention to events and at least ask the question, right? What did the V-score do? All right. Cool, cool, cool. Let's see. In terms of, now, I do want to get into some of the ants. Remember, gang, this is one of 2 sessions we're going to have together. We're going to cover everything, but I want to make sure we continue to build everything up so that when you go back and watch the replay, go back and look at the slides or the notes, everything is covered. All right. So let me see here. Yeah, you know, and for some of you that want to anchor the V-score earlier in the morning, you know, if you wanted to anchor to 2 a.m. Eastern, 7 a.m. Eastern, 9:30, those choices are there. I've done that for years, but I've really been focusing on 5 a.m., which is why I'm talking about it here. Is there a bad anchor? No. What is an anchor, gang? An anchor is who or what happened, an event, right? So there's no, I won't say there's a bad anchor. Sometimes we could find a time or an event that just really wasn't something that's going to be used to base decisions in the future, right? Sometimes we can say, hey, I thought that was significant, but we'll find out, nah, not so much, right? So who? That's always going to be institutions. Maybe it's the FOMC. Maybe it's earnings. What happened? The FOMC changed course. Earnings were a big miss or a big beat. You know, I think we could see something similar in IBM in terms of an earnings reaction. Do you think it might make sense to look at the V-score, not only with on the daily based on the first part of the year, that first trading day, or, hey, what happened here? Would that be another level to maybe put a secondary V-score? Is that starting to make sense? So don't worry about, is it the right one? Have the default. And if you want to run a secondary to test whether or not that was truly where the new anchor is, run it. But the default's going to do a pretty darn good job. So for example, up until earnings, our support was just above the -2. Not at, but just above the -2. And if you roll your cursor over top of this, you'll see, okay, that was, what was this reading here? -1.7, all right? -1.7. We took off from this area here. After that earnings disaster, that's a disaster, gang. That's a big old hole on the chart. That's a gap. Look, we went down to. Did y'all see that? Huh. You never know. So not only did it tested pretty well, I mean, considering the move, that V-score did an admirable job of saying, hey, in this area, there's likely to be some size kicking in. And it did. In about a 15-point range. It did. All right. And then it has maintained support. And from that point on, look at what IBM's been doing. Now, do I love that it's in a downtrend? Absolutely not. But if you're looking at volume alone, that's what I'm talking about. That's the power of the V-score, gang. That's the power of the V-score. Okay. All right. Now, here's where I think a lot of traders are going to start some of the questions that I'm seeing. Here's where, when we come back from break, I promised y'all a break. We come back from break, I'm going to start layering some things together. All right. We've talked about some of the main tools. I'm going to start layering some things together because I think this is where a lot of you think, okay, Rod, really interesting information. And by the way, the V-score bands, really the same explanation as the V-score. So if you want to know what price that -2 standard deviation is, the V-score bands are plotting on the price chart. So you have a price-based definition now of what the V-score reading is. So they work very nicely in tandem. All right. So the real gem of any tool, especially with volume, is to understand there are 4 factors of the market. There's never one reason to get in. Traders are always looking for the holy grail signal. You're going to know that there are setups, and setups have at least 2 reasons to do something. So this is a perfect time to take a break, and we'll start putting pieces together. Now that you know what the pieces individually do, right? We'll We'll start putting some pieces together. I like to call them recipes. We'll start putting them together so we can say this and that and that, or even a third and, or a fourth and. We'll start putting these setups together now that you have a basic understanding of the tools. Okay? All right, so let's take a break to 3:05. Give you all a 5-minute break, and we'll come back with that in 5. All right, gang, that 5 minutes flew by. Hopefully, I haven't got a chance to at least stand up, walk around a bit. Let's go back and let's go into our second half of discussion. Now, remember, gang, we're going to have Thursday's session as well. Many of you are in the Sector Secrets Mastery. That's we're going to put a lot of this together and have our trades as well. But let's get into the second half of our discussion here. Okay. So I brought us back to what the toolkit has, because this is where the and comes into play. All right. This is where the and comes into play. Now, I know you all are not most traders, and again, so grateful for that. Most meaning they're looking for things to do in a way that they think one tool is going to answer all the questions of life. Right? Oh, this one tool is going to give me an arrow. This one tool is going to give me a whatever, and that's all I need. Well, there are 4 factors to the market, and this might be the first time some of you have ever heard this. There are 4 reasons anything moves. Okay? Price, obviously, and most traders stop there. All of their indicators are price-based. They look at price, etc. Some might even take the leap to time, right? What is the opening range? What is the clearing range? When are earnings? When is the FOMC speaking? That's time, events, data releases, even time of day, right? And if you've gone price and time, you're probably separating yourself from the pack, which is just sitting in price. All right. You add another level, and that's where we are. That's volume. This is participation. Does it matter if one contract went off at a high or 1,001? Absolutely. Right? And the last factor, by the way, is volatility. Now, the tools that we're using here are looking at price, they're looking at time, they're looking at volume. Our topic is volume, right? But there are 4 factors to the market. If you can manage those factors, if you can look at the data that they're giving you, you're going to be head and shoulders above most traders that just look at time and time-based indicators. So that's why the process works as well as it does. All right? Because we're measuring the market, and right now we're talking in 3 dimensions: time, price, volume. Now you're looking at a 3D chessboard, not a one-dimensional chessboard. And that's why you're going to beat the one-dimensional traders. Who's trading in multiple dimensions with money, with big size? Institutions. You think they're just looking at price? You think they're just looking at every high and low and figuring out if they want to chase it? You think they're reading news and trying to figure out whether they want to be a buyer or seller? No, they're the ones making the news. When you're making news, you're moving volume. And if you're moving volume, you and I now are going to catch it. Right? Okay. So those are the 4 factors. Now, once we understand each piece, now we're going to put the pieces together. That's why I call it a recipe, right? A setup is just multiple reasons why something could be high probability, okay? So, and can be any number of things. Now, for those of you that remember from the webinar, and the Trish boss was on point, this toolkit is going to work with whatever indicators you've got, from within Simpler, from outside of Simpler, because volume is very seldom measured in the way that you and I are talking about it. Everything benefits from volume. There is not a single setup that is not going to be a better setup when you understand the volume behind it. If a market explodes higher, I guarantee there was a volume level that either preceded it or accompanied it, right? So whatever it is you're looking at, volume is going to make it better. And I don't say that boastfully. I say that because it's one of the main factors of the market. So let's get into the and. What do I mean by always have an and? Again, most traders look for a signal, one thing, a bubble, an arrow, a dot, a line, right? And then they're off to the races. So what we want to do is say, because this is a volume class, right? And again, I'll give you the slide deck, I'll give you the notes, and when I look over the questions from the session, I'll put more information in the notes so that when you get the PDF at the end of our second session, our last session together, you've got a really good resource, okay? All right, so what are possible, call it combinations? What are possible combinations, right? That's what we want to know, right? Because the combinations, these are setups. These are setups, yes? Now we know it has to be something with the volume, right? So combinations for intraday. If I'm looking at a 5-minute chart, this isn't going to be a complete list of everything you could possibly see, but for intraday, I'm going to share with you what I like to see, right? What leads to my trades in the Sector Secrets Mastery. Intraday, time has got to be a factor. So we're talking a little bit about time now. Remember, the volume sweep pro is looking at time. V-score is anchored to time. Volume profile, our VProfile is anchored to time. So time obviously matters. There's going to be some zones that are created between 9:30 and 10. And those of you that are in the room, how many of you are in the mastery? Or maybe I should ask, how many of you are not in the mastery? This might be completely new information to you. It's going to blow your mind. We do this every morning. From 9:30 to 10, we have what's known as the clearing or opening range. That's time. Do you think it matters where the V-score may be in relation to that? Absolutely. So I love looking at the V-score and something. That and can be a Darvis level. Yes, someone asked about Darvis earlier. Now remember, Darvis is mostly price. It's price in a price pattern. But if the V-score and the Darvis are in agreement, great. One of my favorites is the V-score and the V-profile. That's one of my favorite combinations. That's my peanut butter and jelly intraday. Okay? That is my peanut butter and jelly. So V-score and, all right? V-profile, Darvis. What else can I look at? The sweeps. If I get a volume sweep, V-score and a volume sweep, what else can be really cool? Well, intraday, volume sweep is only an intraday tool. I say only. I don't mean to diminish it in any way. It's an intraday tool. Volume sweep and Darvis, V-profile, right? You see how we're putting these together now? Now, these are just two, something and something. Now, some traders want to add a third and, right? Is it above or below the previous cash close? That's a nice one. It's a nice filter. It's a nice filter. That could be an and for intraday, right? So when you start putting these things into combinations, let me warn everybody, 2 ands is a minimum. 3 is nice, but you don't want 6 ands. You'll just seldom get a trade-off. The and is actually a filter. What are the criteria you need in order to do whatever it is you want to do? And we do this in regular life, right? We do this in life. What's the weather outside? Well, it's hot, but it's overcast. What do I need? Well, I probably want to dress light and carry an umbrella. We do this in life all the time. We think of the contingencies. Now we have automated data giving it to that. Okay? So these are all the different kinds of ands I can look at. Oh, what else can I look at? I talked about the clearing or opening range. We also have the initial balance or the institutional fair value. These are things that we look at every single morning in the room, right? I would like to look at that and maybe a sweep and maybe the V profile, support or resistance, right? So when two things agree that there's support or two things agree that there's resistance, at least two, I've got to set up. One, not enough. That's why the people looking for the Holy Grail indicator are frustrated. Oh, but the arrow showed up, or the line showed up, or the dot plotted. But what else was confirming that size and follow through, which are kind of synonymous, are going to be there? Trends are great. Bader, yes, trends are fantastic. Are they necessary? Not always, but they are great. Don't get me wrong. Trends are great. Sorry, gang, I'm going to open up my office door. We had someone working on the AC here in my office, and it is pretty toasty. All right. So does everyone see what I mean by and? Now, you can put in your and, right? Whatever indicator you say, Rock, I really like this indicator. You know, I can't speak on all indicators, right? The hourly price movement range could be another one. Absolutely, Alberto. All of the tools in the Sector Secrets Mastery and all the tools that I teach work together, right? They work together in harmony because each one has a job, right? But if there's a tool that you like and say, gosh, Rog, I see this thing is happening. Could I confirm it with VProfile or VScore? Can I confirm it with something from the volume toolkit? Absolutely. Absolutely. Okay. All right. The next thing that we want to get into is a little bit of structure. Okay. And I didn't mention this before, but I want to make sure I mention it really clearly. And I'm going to put it in all in caps. I will not buy, that can include calls, right? No bullish positions. I will not buy in a downtrend. This is where the multi-structure or the multi-trend, all of you have one or the other, right? And I will not, and there's not many nevers, okay? This is a never, this is a not. I will not sell in an uptrend. That's really the only invalidator. What do I mean by invalidator? I'm simply not allowed to do that thing no matter how many things light up, no matter how many things are in agreement. I won't do it. I simply won't do it. Okay? So that's probably one of the most important things to keep in mind. The structure, this is why you have the multi-trend as part of the toolkit. The structure matters a lot. And that is your multi-trend. If you're using the tops toolkit, and I know many of you have the top tier, that's the multi-structure. Just to account for both what you all might have in this room. Okay? So that is the main thing. So even if the V-score is lighting up and we're in a downtrend, I'm not going to do it. I don't care what the time frame is. So any questions on the ands? Any questions on the ands? And remember, gang, whether it's VProfile, whether it's VScore, whether it's the VScore bands, not banks, banks are great too, whether it's the Darvis, right? These are all support and resistance. Almost everything we're ever going to talk about in trading can be pretty much whittled down to direction, support, or resistance. In this case, we're using volume as support and resistance. All right. So let's go through a few more charts and let's put some things together. Yes. So everyone knows where the anchors are now. I'm going to make sure the V-score is nice and big. And let's do this. Let's go to the intraday charts and take a look at the indices, for example. All right. Now, when you're looking at the indices, remember, time does matter. Time does matter a lot. Time of day, especially in a low volume environment. You might say, Rog, how do I know it's a low volume environment? Use your volume labels, right? So if I'm looking at right now, what's happening in the Dow, do I have normal volume today? Right now, about 40 minutes before the bell's going to ring, I have 66%. Exactly, Rom. We do not. We do not have normal volume. Yeah, at all. At all. All right. Now, some of these, well, let's just use the Dow that we're on. I haven't traded the Dow today, but I like using examples that are not well chosen, right? Was the V-score wrong here or here? It wasn't wrong, but what else was there? Was there anything helping us out? Sweeps. You can throw the Darvis in there if you'd like. We had no trend, so there's no wave. No, we didn't. Here I had a V-score and nothing else. Now, when we have, let's do this together. I don't know what this old line is, but let me get rid of it. Let's add in our, let's throw the Darvis and the volume profile on there. Two very, very effective, easy, automated support and resistance levels. Yes? So put the volume profile on there, give us some context, and I'll put the Darvis on there. All right, so just bear with me. I'll throw the Darvis on there. Okay, I'm just going to activate them and let them light up. Okay, now we got some lines in the road, yeah? Here I am, right here, this, and by the way, it's hard to go back in time. So let's talk about what's happening now, because again, volume is always going forward. So these levels were not fixed all day, but let's say we're together watching this right here. We hit the value area low. Did everyone see that? And we have a V-score. That's what I mean by and. Okay? Did this sweep have anything? Not really. Not within a candle or two. Okay? What about this sweep that's happening right now? What's the and? Is it happening at the value area low of the V profile? Is it happening at the Darvis? Do I have a V-score down here at -2? Nothing. It's just hanging out there all by itself. No tool should ever be the only reason you get into something. If this sweep was happening with the V-score down here, I've got an and. Okay? I've got an and. If this was happening with the, let's say the Darvis was up in here, or even here, I've got an and. So notice some things are just out there all by themselves. All right? So Phoenix, for this particular example, it's never a fixed number. For this particular example, the V-score support hit the -2 at about 11:55 Eastern. It hit the -2 almost again at 1:55 Eastern. So the -2 for this example, yes. By the way, where do you think resistance is? Take a look. Where do you think resistance is? If I've just highlighted that this area is support, where do you think resistance is? I'll give you a hint. How many times have we hit that level right there? Yep. See that? Here, here, just we keep going into that area. How much higher could it go? Probably not a whole lot more than that V-score level, which you might, well, okay, Rog, what is that? What is that level? That's actually the mean. Right around, yeah, I'd say between the mean and about 0.24. Yeah, Rom, good eye, 2.2. I'd say 0 to 2.2. Every time we get up there, what happens? Now, let's say you were tempted to buy this area here. Rog, the old Momo trader in me is waking up. How do I keep that thing at bay? That Momo trader in me that says, hey, we need to play that breakout. V-score says, please don't do that. Do you see that? So sometimes it's just going to keep you from doing something that has a low probability of follow through. And if in the beginning, an indicator will tell you a no, that's not bad. Too many people are looking for their indicators and setups to just say yes to everything. Sometimes an indicator saying, please don't do that, is as valuable as one saying, yes, do it, right? So again, whether you're looking at support or resistance, yes, there's plenty of tools, Jack. Whether it's Darvis, whether it's VProfile, let's just look at them all as support and resistance, and we want that and something else. Am I doing something different with the Darvis? Absolutely not. Does that make sense, gang? Am I doing something completely different with the Darvis than I would be in anything else? No, it's just support and resistance. Okay, so someone mentioned pivots earlier. I don't use pivots, but if you're a fan of pivots, whatever kind of pivot you're using, would you want to see the pivot and the V profile? Would you want to see the pivot and the V score? Right? This is what I mean. Anything you've got can be used with this toolkit. So don't get hung up on any specific tool. Just ask, is the V profile agreeing with the support? If you like Fibonacci, great, whatever it is you like. Yeah. I don't do things that I cannot automate, right? Fibonacci is a very cool tool. I've been using it on and off for almost 40 years. The problem is it's very subjective. If I gave us all the same Fibonacci or same tool, we'd probably have 70 different Fibonacci levels because it's a little bit more subjective. However, yeah, whatever it is you want to use, absolutely, absolutely. So whatever your preference is, fill in the blank. It could be Darvis, it could be Pivot, it could be Fibonacci, absolutely. But does the V-score agree? You with me? I'm not doing anything different with one over the other. It's something and something else. All right? So, Tony, try not to do that as a general rule. Every single day, the V-score is going to give you extremes, right? So today, on this 5-minute chart of the Dow, today, for this session, yeah, that's pretty much my range, right in there. Got another low here. Tomorrow, it might be a whole other set of levels. Let's take the S&P, all right? Notice the S&P has a whole bunch of different levels, right? So we don't look at it as -2 always means fill in the blank. We look at like a line chart. Where was the resistance? Where's the support? I know that's extreme low. I know there's an extreme high up in here. I look at where the V-score went and turned around. And if I have at least 2 hits, I've got a double bottom or I've got a double top. Does everyone see what I mean about treating this thing as a line chart? Is that starting to resonate as we go through some examples? The level that's just screaming at us is this level right here. How many times have we hit that? Again and again and again, right? 2 hits, at least 2. The first one is a discovery hit. Remember, I'm not guessing at where the institutions are going to go. They have to go first. They have to go first. I think most traders are so used to people talking about indicators that predict that they forget trading is not about predicting. I haven't had a crystal ball in my entire career. We're counterpunchers. We're going to let the money go first. Let the money reveal, tip their hand, right? And then we'll say, okay, the next time we get to this level, if I know the money stepped in here, that's the discovery hit. Oh, there's the next one. Right? We had one earlier in the morning up here. That was before the bell. We had one here too. 1, 2. If you can find support and resistance, and I hope the repetition kicks in. If you can see support and resistance on price charts, that's all you're doing with the V-score line. If these were candles, right, and not a line, just imagine that you have 2 charts, right? You have 2 charts. One is showing you support and resistance via price. One is showing you support and resistance via volume. Yeah? Okay. So the and still applies to intraday, right? Now, the sweep is a cool tool, but again, I think a lot of traders think, well, I'll just buy every sweep. Nope. You want to buy sweeps that accompany what? We need an and, right? So let's go back up to, these are the intraday examples. Yeah. So with a volume sweep pro and fill in the blank, right? The and can be, of course, Darvis. The and can be, of course, VProfile. The and can be the wave, right? You have the tops tools, right? What else can the and be within our set of tools here? It could happen with, what else? The volume sweep pro and V-score. Got to choose at least one. All right. So when we talk about the volume sweep pro, yes, those are those little cows and bears. So in and of themselves, I just don't buy them on their own. It's got to be and. So we have a couple ands here. We had a cow, we had a Darvis, We had the value area low. I'm presuming the value area low was there because, again, you can't go back in time. Value area low, point of control, those are dynamic levels. They're getting fed volume, so they're going to respond throughout the day. Yes, but I need something and something else. And the Sweep Pro is no exception. There is no exception to that at all. Something and something. If you've been struggling with an indicator that you really like, and you put that volume tool, one of the many that are in the toolkit, to work with it, and I would love, maybe tomorrow some of you might test. Say, Rog, on Thursday I tried this, and I'm seeing that it's working. So remember, the Volume Sweep Pro, that are these things, okay? Little cows and bears. And they need an and. They need an and. Okay? The VProfile, no, that's the Volume Sweep Pro, Dustin. Okay? That's the, yeah. Awesome. All right, so let's see what else we've got here. And by the way, the toolkit that you have right now as being part of this class is more than I had 20 years ago, right? So you are starting with a very complete toolkit for direction, for support and resistance, and for volume. Very thorough toolkit. As you want to add more factors to your approach, you can start getting better with time and understanding whether you want to play earnings or avoid them. I recommend avoiding them. Whether you want to understand what's happening with any major event, whether you want to understand what's happening with day trading and clearing ranges and initial balance, all that stuff. You're going to make sure you start to add time, because that's probably the biggest difference between what we would do on an intraday basis versus end of day. Time is a huge factor intraday. All right. Now, when we get to the swing, let's do the combination for end of day. And for those of you wondering, Rob, do you put any of this on the 4-hour chart? I don't. The 3 time frames I like my volume studies on. In fact, the 3 time frames, the vast majority, 98% of my trades are going to be on will be a 5-minute for day trading, a daily for swing trading, and the weekly for long-term account growth. So, for example, let me take an example from the room. We have a BMY trade that we have on right now. So of the folks that in the class right now, how many of you are in the mastery and have BMY and took some nice profits? Yep. Do you see anything on BMY that's grabbing your attention? Just look at the V-score. I'll give you a hint. You see anything on the V-score that's grabbing your attention? What's going on here at the 2? How many times have we got 2 and just slightly through the 2 and bounced up? How many times? 1, 2, got a 3rd here, got a 4th there. 4 times, at least 3 or 4 times, easily. See that? Exactly. So for whatever reason, that's where they're playing the game. And I say they, size. That's where size is playing the game. Where did we get in? Where did we get in? Did we have an and? Absolutely. We had what was the and on this one? For those of you who don't know, it was actually a Darvis. I believe it was the Darvis on that one. We have quite a few open trades right now in the room. I believe it was a Darvis. I'm almost positive. Yes, it was a Darvis. So this was, for those of you that are wondering, Darvis and. There's your move. Now, here's where traders get into trouble. How many folks are looking at BM? And this is going to be where you're going to say, Rog, I'm starting to see where waiting for support to be tested in a predefined zone based on the tools you have right now. Every one of you have Darvis. Every one of you have the multi-trend or the multi-structure. Every one of you have the wave. Okay. Now, if you say 1, 2, 3, 4, right? What are most traders going to do today? What do you think's happening in BMY today? And I love that they do this. I'm super happy they do this. They're chasing it higher. They either chased it higher yesterday or they're chasing it higher today. Exactly. They're going to buy the Momo. I'm very grateful for Momo chasers, right? So are institutions. We love them. You're going to learn to love them too, just like institutions do. We buy when there's very little attention being paid, but there's a lot of attention being paid. It may not be retail attention, right? It's just not retail attention. Yesterday, definitely today, we have retail attention. All right. Now, the closer we get to 3, what do you think is going to happen? What do you think is going to happen the closer we get to 3? Which, by the way, you can see that V-score band right up in here. What do you think is going to happen? I would expect resistance. Maybe not permanent. It doesn't mean we're going to tumble down from there, but I would expect what we saw last time. A little bit of a pullback, didn't we? Now, I want to make sure everyone sees this. I'm going to take the drawings off it, take a look at the V-score, and I'll throw the Darvis on here too so you can see what we actually did. Now, this is a trade we did in the room. Now you can see, oh, okay, Rog, this is putting the tools together. Some light bulbs going off. Remember, you've just got these tools. You've got 90 minutes of training on them right now, and you're already starting to see what's been a pretty darn profitable trade for us. Just 90 minutes in. Imagine when you get another session when we do this all over again. Yeah? Here, boom. Thank you. Follow through. See the and? Yeah. We won't see the bear on this. Bear is intraday only. This is a daily time frame, destined. Yeah, so no bear on this. No. That's only the intraday. So was it one thing that I just said, oh, I found the Holy Grail. I'm going to buy all the hits on the 2. Nope. This and. Is everyone starting to see why I keep saying and? Because most traders don't get this. They don't get it. They want one tool to do everything. And then they wonder, gosh, am I bad at trading? No, you were just given a bad process. That's all. It's not your fault. A lot of folks want to say, well, this is the end all be all and just follow this and you'll be fine. Process means and. Direction, that's where your multi-trend or your multi-structure is going to help out. In fact, for those of you looking at the multi-trend or multi-structure, you'll notice that before the breakout, we were actually just coming out of an uptrend. What do you think most retail traders were doing on the first sign of a pullback? They panicked up here, probably chased it. And then what do you think they're doing down in here that institutions were buying? Remember, for every buy, there's a sell. Do you think institutions were selling at support? No way. People were panicking. Oh my gosh, BMY is going to tank. They'd probably cite some news. They'd probably cite some rumor they read, right? They're selling. Institutions were what? Buying and buying and buying and buying. And then who won? You guessed it. All right. And so hopefully you can see where BMY and one of our room trades coincided with the Darvis and the V-score. Cool. All right, let me make sure we're taking some questions here. So let's give me one moment. I'm going to make sure I'm keeping up with some of these questions. So again, on the tools, let me go back to the slide deck for a moment. The one tool that is intraday only is the Volume Sweep Pro. Okay, that's the one you're going to see running on my 5-minute chart. We've been doing this pretty often in the room, looking for sweeps and, right, this is an intraday tool. Right, now there are intraday versions of the V-score and there are intraday versions of the V-score bands. It's an intraday version of the VProfile, but this is the only intraday tool. Again, the 5-minute, it's not going to show up on any other, I'm not going to use it on any other time frame. It's designed for intraday. Okay. I don't use the 4-hour I don't use the volume in the 4-hour. I do like to trade the 4-hour, but frankly, it's probably the time frame I use the least. It's the time frame that I use the least. Yeah. The challenge with trying to anchor on a 4 hour is Sadi, it's a great question. The challenge with anchoring, and believe me, I've tried. The challenge is, where do I anchor from? Because it's a very long-term intraday, but it's kind of a short-term version of the daily. So I think there are other tools that can help us with 4-hour charts, but you can anchor the intraday tools on it. I just wouldn't. I would say for our purposes of volume, and really for the purposes of 98% of my trading, I very seldom will use a 4-hour. Yeah. And in a lot of ways, I could probably remove the 4-hour from my layout. So yeah, no, thank you for the question. It's a great question. It's a great question. If someone said, Rog, if you're going to trade volume max, toolkit only, V-score, VProfile bands, etc., 5-minute, daily, weekly, and that would keep your pipeline really full. Yeah, that would keep your pipeline of opportunity. I think right now we have, I don't know, 5 or 6 open swings. And even in this low volume environment, we've been getting 1 to 2 day trades a day. Yeah. So I either day trade on the 5-minute or I trade the daily for overnight position. So BMY was an overnight position, right? Okay. Let's see what else we have here by way of questions. So yeah, that's why the 4-hour just kind of sits on the sideline. Let me show you something on KRE here real quick, because we had KRE in our open trades. And let me go to the V-score layout. There we go. Okay, let's take a look at KRE together. Okay. I like KRE. I would like to trade it. It's got good structure. It's been very bullish. We had a nice winner on it not too long ago. I'd like to have another again, no doubt. And let me mention one thing I tend to do with my Darvis. I tend to turn the plots off. So I'm going to do that right now because I know I'm using the default that you all have, but I tend to turn the backward plot off. I just find them a little noisy. So I'm going to do that right now. Okay. So here are all my Darvis. Same Darvis that you all have. Okay. All right. So what do I want to do? I want to be a buyer. Oh, wrong chart. I want to be a buyer. Here we go. I want to be a buyer, but where? Okay. So 2 things are probably going to pop out. One might be, Rob, your automated Darvis is here. So I have resistance here. I have support there. Okay. I'll show you what to do with Darvis in just a moment. What's really much more important before I even get to that Darvis is, where have we been bottoming out on the V-score? It's not a really crisp, easy double top or double bottom, is it? Is that there? There's 3 levels that I could make a pretty good rationale for saying there's support. So what's the tie break? What's the tie break here? I know I have this low here and here. I just connect the dots, right, and go across. Does everyone see what I just did? But what here is agreeing with that? What on my price chart is agreeing with that? Not much. Not much. Not right now. Yeah? So whenever I have a Darvis, the thing I like to do is I will identify the lower 1/8 of the range. Now, before that sounds super complicated, it's not. I'm going to show you how to do it right now on any platform. Okay. If you are on TradingView, Thinkorswim, all you need to do is go into the retracement tool and make sure you put in a 0.125. That's the lower 1/8 of the range. The levels that I like to see would be obviously where I'm drawing the retracement from, which are 0 and 1. I'll have a 50% and I'll have a 0.12. Okay, that 0.12 is what we're going to talk about here. When I pull the retracement, what I want to see is what the lower 1/8 or the lower 0.12 part of the zone is. That's my zone. In fact, this is what we did on BMY. Okay. This is what we did before in BMY. If price can get here and my V score is at a level of support, then I'll do something. Right now, the V score says, yeah, we've had support here, and it very well might bounce from here. It could, but I don't have an and. The next level down is just a smidge below it. And the last level is the +1 standard deviation. I don't have the and. Okay? I just don't have the and. So if I get down in here, then I'll look down here and say, do I have an and? Okay? Now, if you want to plot the V-score bands, that's great. You certainly can. Right? And that's, I do have them running. Very unlikely we're going to go to the +1. That's way down here at 74.50. So I'm probably going to find support, if I do at all, somewhere in the recent lows. So KRE is not a great example, but it's a real example because I have a couple levels of support. And some of you might say, Rog, it looks like it wants to hold here. It might, but I just don't have an and. Right? Something and something. Okay. I like that position. I'd love to get into it, but I don't have a setup. And by the way, that's very much a part of, again, why traders get in the tall grass and get into trouble. They find the new shiny that's on their screen and they just focus on that. Another setup we had, and I'm happy to look at some symbols with you all because I want to keep running through the process. The repetition is what's going to drive using these tools, right? Drive your confidence in using these tools. Let's see. Hang on one sec. I thought I saw one for gold. Okay, gold. Sure. If I'm going to trade gold, I'm going to start with gold futures, GC. All right. I really don't have much to work with here. Is gold weak enough to buy into on the daily? Probably not. I don't really love what I'm seeing here. Gold's really taken a tumble today. Yeah, it's really taken a tumble today. And it's been very, very weak. But as far as the daily time frame here, I don't really have any kind of longer term setup in focus at all. No, I really don't. Not with the volume. There's not enough convincing volume where we're at right now. So, which tells me there's not too many folks that are compelled to do anything with follow through based on where we are right now. What about GLD? Well, I'm going to look at GLD through the lens of gold futures. This one trades 9:30 to 4. Gold futures trades about 23 hours a day. So I can't say, and I think the most important thing is looking at a chart and looking at the tools and saying, nope, there's just nothing for me to do. As long as we're looking at gold, let's go take a look at GDX. Gold miners. Gold miners. All right. Gold miners is really screaming resistance. That's it. That's all it's screaming at me right now. Whatever you do, don't get long through here. Support would be waiting about -2. So there's my support. That's my support area. This is my resistance. So this is telling me, whatever you do, don't do that, Rog. Okay? So somebody's just warning me off. The trades we choose not to take are frankly as important as the trades we do choose to take. And what's really cool is you're learning how to use these tools in probably the most difficult summer we've had in about 20 years. And that's great news because as volume starts to increase, these levels will not only get more active, they'll get even sharper. All right? They'll get even sharper. Hank, what symbol are we talking about there? I see your question a little earlier today. What symbol? Or am I hang on, am I in the wrong room? No, there we go. No, sorry, I was looking at the other room. Sorry. I'm always checking the mastery room. Sorry, that was a question from the other room. So I always have my eye on the on the trading room too. All right, DL asks, does known institutional involvement matter? When you say known, what do you mean by known? What's the metric? And as in, if it's a ticker that's widely held by funds and such, does that matter? DL, from where do they hold it? Yeah, Hank, sorry, I saw your question in the other room. I'm sorry, Hank. Yeah, I saw it around I think you asked me that around 1:30. Sorry about that, Hank. So Dale, probably the most important question is from where. So how many of you have seen a hedge fund manager on I'll just say CNBC, I'm not making fun of them, but how many have seen a hedge fund manager on CNBC start talking their book? Yes? I mean, if you've been watching CNBC for even 3 or 4 months, someone will parade their book of open positions, right? Do you think they bought it right before they went on? Or do you think they're going to buy it after they get off the air? Usually, 13F filings have shown they bought that 2, 3, or more quarters before they ever staged their infomercial on probably the biggest financial network, right? They're not telling us as they're doing it. They're not telling us before they do it. They're telling us well after. Why are they spending the time? I mean, they got so many things they could be doing. Buying an island, whatever it is they do. Why are they on financial network television? Entertainment television, as I like to call it. They probably need either some momentum, enter the retail trader, or they need to liquidate. And they need people on the other side of their cells. It could be either one of those. Either want some follow through to higher highs, or they want to take a profit and they need someone to be on the buying side of it. Exactly. So that's kind of where, Dale, I totally hear you. And if we look at the 13Fs, you'll get an idea of what they've done, but it's always past tense. Yeah. So it matters from where they bought it. Does that make sense? And that's a great question, Dale. It matters from where they bought it. It matters what their cost was. Where do they build their position? Yeah. Okay. And if you have a particular symbol in mind, yeah, just let me know what that was. Nike. Okay. Let's go take a look at Nike. All right. When I look at Nike, that's a heck of a move down it's had. My main concern on Nike is that it's trying to go into a downtrend. So when you look at your multi-structure or your multi-trend, I'm sure everyone has that running. It looks like it's trying to go into a downtrend, isn't it? Right? So if it's in a downtrend, that's a hard no. The only thing I can say for sure, based on what the V-score is telling me, is that every time we got to and just through, look at the -1 standard deviation. If every time you bought puts at the -1 standard deviation, who do you think's waiting there? Look at almost every single time we hit that resistance based on the -1. Do y'all see that? I'll leave it there for a minute. Yeah. It's a short. It's a short. That's on the daily time frame though, right? If you say, Rog, what about longer term? What about that weekly? Right? Now the V-score is anchored to April 7 of last year. And I'll ask the same question. I want to make sure it's not in a downtrend. Now, I do believe the weekly chart of Nike is in a downtrend. So I'm not even allowed to buy it. But let's say it shakes off the downtrend. Let's say we at least go to a neutral trend. The -2, if not the -3 standard deviation, if we can ditch the downtrend, would be fine. But then right when we get back to the mean, selling pressure. Selling pressure. So I have a little bit of buying support here, and most definitely here if we get there for a second time. But I'd be and that's a long term. That's a weekly chart. If your time horizon is 6 months, 12 months or longer. Yeah. So Nike's kind of bearish, especially on that daily. Nike's one I would look at for long puts when it hits the resistance of the -1. Okay. All right. Next one is ALAB, sure. And so I love this conversation of the workshopping, because when we do it this way, gang, again, I could go grab 20 images. I could probably go buy 200, go grab 200 images of things that I bought, options or shares that I bought based on the V-score behaving the way it has in the past. But the best way to put anything together is looking at what's happening now and making some informed decisions. So if I'm looking at Astrolabs. If I'm looking at ALAB, that would have my attention. And that could be that lower eighth of the Darvis. That could be a lower eighth of Darvis play. Somewhere between the anchored VWAP and the Darvis in this area here. That's not a hard no. ALAB, this is what, yeah, Astrolabs. That would be something you look at. Now, ultimately, so this is a process that we do in the mastery every single day. What group does, what is this, Astera Labs move with? What ETF? What sector, right? Is that sector strong? Or is this a clean shirt in the dirty laundry? Those are watch list building conversations. Let's say you've exhausted that and you say, yep, this is still something I want to do. I'd keep an eye on the mean, and I'd keep an eye on the lower eighth of the Darvis. So there's your and. There's your and. V-score and Darvis. And they're pretty close together. You see that there? They're pretty darn close together. All right, next up is a question on CTVA on the weekly. Okay. CTVA on the weekly. Now, if you're liking this process, gang, you're just scratching the surface of what you're going to be able to do with this toolkit by the time we wrap up on Thursday. But if you're liking what we're doing right now, this is exactly what we do in the mastery, and I'll talk about that in a moment. So CTVA, I don't have much helping me out here. What I would say with CTVA is we haven't quite got to the mean. It hovers just above. See that there? And even though it went a little bit below, just a little bit below, I'd say you're looking at about the halfway point, or maybe a 0.5. So I'd say your low is your support zone is gonna be somewhere in between the +1 and the mean. And that looks to be a 0.6, a 0.6. We bottomed out at 0.46. Pretty darn accurate. I mean, how much movement do we get between those two? Less than 2 points, right? So if you said, Rog, we bottomed out here before, I'll look for a retest of that level, which was in here. You took about 2 points of heat from that entry. I would look for an entry probably no higher than about 76 on the weekly chart of CTVA, Luke. Do you see that there, Luke? Yeah, that's what I would look at. So GGG asked, can we still upgrade to the mastery? GGG, yeah, I'm glad you asked. Yeah, the Trish boss actually did she talked to the office. Yeah, and for those that chose, hey, Rog, I want to at least get the tools and I want to understand what they do, but I'm really starting to see the value in it. Yeah, so this is our schedule in the mastery. For those you're wondering, okay, Rog, if I want to do this with you, yeah, the Trish boss has busted her behind and the upgrades are available to you, but you're going to need to call the office to do so. So what are your options so you know what's available to you? So if you purchase the basic package, we've made sure that you have time to upgrade and you can take your learning and this process to the next level in the mastery. Absolutely. I used a lot of the mastery examples in this session so you could see things that we have actually done. All right, so if you're in the pro and you got 90 days, you can go to that, or you can go to the elite, which is the 1 year with me in the Sector Secrets Mastery. So what's included? Okay, Rog, what do I get? anything worth mastering is putting in the time, the practice, the repetition, getting that real world experience, which you're getting a taste of here. It's not enough to learn what to do, right? You need the opportunity to put it into practice again and again so you truly understand what you're doing and why you're doing it and how to apply it in real market conditions, right? Which is a whole other thing. That's where the Sector Secrets Mastery makes the big difference, gang. So the class, as we've done just in the first of 2 sessions, gives you tools and knowledge and process, right? The membership is going to give you the opportunity to keep practicing, applying, building the confidence, building your P&L, and frankly, getting my trades. So for those of you that purchased the Pro, as always, thank you. You got the 90 days membership. You can upgrade to the Elite, which is going to give you the 1-year subscription. Now, the Elite, I got to tell you, is by far the best value because with this promo, you get a discounted annual rate for a year plus the class, right? And that was $21.97. The Mastery membership alone, some of you probably have looked, it's $24.70. So on top of those discounts, you're going to get another $500 off, which is why I want to make sure, thank you, GGG, for the question, because I want to make sure I tell y'all it's a $500 discount. I won't be able to do this later. So I want to make sure that if it's something you want to do, you don't grab it too late. So you'll get $500 discount for the next year renewal. So with the Elite package, you lock in the renewal rate of $19.70 instead of $24.70. And if you're already a member and you want to upgrade or renew your monthly or quarterly or annual and lock in the promotional rate, yeah, I'm talking to my VIPs here, give the office a call. The Trish boss has talked to them. They'll be happy to get you set up. Okay. All right. So call the office, I think is the bottom line, but I want you to know what you can get. So if you want to upgrade your packages, that's the phone number there at the bottom. All right. So give them a call. GGG, you mentioned that? Yeah, give them a call and then tell them where you are now, what you want to upgrade to, and they'll hook you up. They'll hook you up. Because there's just, when we do classes, there's no better time to get the mastery because it's never going to be less expensive. And to me, if you can save $500 and put that in your trading account, I'd rather you do that than think 6 days from now, 6 weeks from now, darn it, I should have done it. So that's why we want to make sure that you have the upgrades available. All right, let's tackle a few more questions here. By the way, how many of you, and I know there's more questions, we have a whole other session. We're going to do more repetition. I'm going to show you more anchoring, all sorts of cool stuff. But how many of you, just after the 120 minutes, say, okay, Rog, I'm starting to see where my old trading process used to go wrong. I can see where when I was buying, I was really buying right into resistance and I was getting swept. And then when the price was moving lower, I thought, oh my gosh, it's never going to go back up again. And little did I know, support was waiting below. How many of you are starting to see just after 120 minutes, actually less than that because we took a break? Jeff X says, I don't think I can trade without V-score again. Jeff, you know, I think a lot of you might know, this came in 2008. This was full bore panic globally. And this is where I figured out the V-score. This is where I was in total desperation mode, thinking the only way I'm going to be able to manage what looks to be the end of the world, and some of you might remember what that felt like, is to coattail size. And that changed everything for me. Yeah. And absolutely changed, and no exaggeration whatsoever. That changed everything for me. Because I realized the only way something is going to move is if big money, and I trade some decent size, but not that much. If big money is, and think about it also this way. When institutions buy, what else do they do? Remember, they have a whole horde of analysts and other brokers and newsletters, right? What do? They start the full crescendo of attention-grabbing content. These people aren't stupid, right? They buy first. They can't hide what they're doing because they still need to move volume. You can see it on the chart. And then what happens? Their analysts end up on television. Their newsletters start talking about the position, right? They upgrade. How many times have you seen a stock being upgraded to whatever, right? The whole parade begins. That's where the follow through comes from. And they need those retail traders to buy at higher highs. We don't want to be those retail traders buying at higher highs. We want to mimic their positions as best we can. 13Fs are helpful, but they're delayed, right? By the time they're talking about it, they've already done it. Yeah. So Jasper says, very awesome session. Thank you. Had many aha moments. I love it. I love it. Miss TQ, thank you, Miss TQ. I know you've been around for a long time here in the Simpler Verse, and that means a lot. That means a lot. And all of you, the feedback is amazing. Trading and the markets have been very good to my family. Some of you might know a little bit of my story, how important it is for me, for you to not only understand this, and I'm going to mention this again next week. I'm going to let you all go and enjoy the rest of your day, but I want you all to learn this so you can teach your kids, your grandkids, your nephews, your nieces, right? Teach that next generation so they're not getting run over by Wall Street's game. I take that really seriously. My mom was able to, after my father passed, use what little grub stake she had and grow it, right? She started and she whet my appetite for this, and I just ran with it. And what I would love is for you all to learn this and then go teach them, because in teaching, it's going to drive the lessons home even more. Find the grandkid who has a little bit of interest in the stock market, or your kid or that niece or that nephew saying, yeah, what are you doing there, mom, dad, uncle, grandma, right? Teach them. You'll be better at what you do, and we're empowering that next generation to not get swept into the retail nonsense. My son's been learning all summer. Love it, Nopium. Nopium, did I miss a question from you earlier? There's been so many questions, and thank you, everybody. If it did, it wasn't on purpose. I'm just trying to keep up with the chat. I don't know if I missed it. I thought I saw something, and I wanted to go back, and then the chat moved on at a rapid pace. All right. Yeah, teach that next generation, gang. That's what my mom did for me, and it changed my life and my whole family's life, and that's what I want for you all. And this is a really big step in that direction. They're trying to, Tony, they really are, and I don't blame them. I don't blame them, but I want you equipped. Yeah. And to me, again, I want you all to learn so you can teach everyone around you, right? Even the simple stuff, so they're not getting swept up by the nonsense out there. What does the word sweep mean, Ravi? It simply means when retail traders are selling, institutions are buying. Or when retail traders are chasing something higher and buying, institutions are selling. So sweep is also known as liquidity grab. But really, in essence, it's filling orders. That's all that it means. It's filling orders. But usually in the opposite direction of what it appears to be doing. That's really what it is. Phoenix, my mom taught me some basics, but more than that, she gave me some latitude to really run with the process. She started letting me manage things from a very young age. She saw I had a talent for it. And that was a lot of confidence, because you're talking about a widower with a set amount of dollars. And she said, I think my daughter's pretty good at this. And all those years later, yeah. Her confidence in me made a huge difference. And I have a lot of confidence in you all. We're here to lock arms with you. Session 1 is done. We're going to go on to session 2, day after tomorrow. And then we'll just keep putting the pieces together. So maybe if you want a little homework, not homework, but think about some symbols you'd like me to look at. I'm going to find more examples. We'll talk about more ands, 5-minute chart, daily chart, weekly chart. And we'll start putting more and more pieces together. And then this stuff's just going to pop out at you. Yeah? So, oh my gosh, you bought some of the Wiley Forex books for me in 2010. Oh my gosh, that's awesome. So glad to meet you in the room. That's amazing. That's amazing. Sadi, awesome. Awesome. Fantastic. After all these years, we finally get to meet. Excellent. Excellent. All right. If you have any questions, gang, please call the office. They'll help you out. Everyone's situations I know is a little bit different, but let them know you're in the class, and they should be able to take care of you. All right. Okay, gang. So I've run over. Thank you for your time. I don't want to take away from whatever it is you got to do next, but we'll get the notes out to you. We'll get the slides out to you at the end of Thursday, probably into Friday morning. We have one more whole session to go. And I look forward to the second session with you all. This one's been great. Fantastic questions, gang. Sharp bunch, really sharp bunch. Thank you. It's a privilege. Be good to each other. I'll talk with you soon.